Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at Avax. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one so that you have more context. Also, I want to mention the two donation links down below in the description. You can go over to the official websites where you can donate to support the Ukrainian refugees or Ukraine's military. Thank you all for understanding. Thank you all for donating. Let's get on with the video. So jumping into the daily chart on TradingView, I do have a Fibonacci retracement set up. This was my swing high and this was my swing low. So this was basically the downtrend that we were in, this ABC correction, and we bottomed out here last summer at around about $9.50. And as you can see, I did keep this yellow buy zone over here from last year because this is where I was giving you your buy zones. And as you can see from here, we created a nice double bottom pattern and we reversed, and it was glorious from there. And potentially we could be looking at a similar scenario over here. But of course, here we didn't have the fear of a recession. And obviously here we have. Because if the US does enter a recession, then even if you have a double bottom pattern here and you start breaking the neckline and you even take out the target and you go all the way up, let's say to $30 here at the golden ratio, you are going to go down if we have a recession and people get scared and Bitcoin drops below $15,000. Altcoins will bleed as well. So you have to keep that in mind and you have to be ready for these black swan events. Now moving and zooming in to the chart here. So I did give you a trade from the 20 EMA basically. So the last update was June 16th and I did tell you that we could bottom out here at $14.50, which was the 0.236 fib retracement of this large fib. And from there, we did wick a bit below that, but I'll take and measure the move to the upside from where I told you we were going to bounce from. And that was a nice 51%. And let's say you sold at the resistance of the descending broadening wedge over here. That would have been a nice 35%. You could have taken profits over here. You could have taken profits at the bounce of the 20 EMA, but you still did come back down. You did retrace. I mean, you did break the 20 EMA over here, which was a bullish sign. You even back tested it as support for a little, but then you started dropping down, and now you're back testing the orange resistance trend line once again, which we have done so many, many times before. And it looks like we are targeting $14.50 once again. So this would be a very good entry in my opinion, because if you come down here and you potentially bounce, you do have yourself a very nice double bottom pattern. And I'm going to give you the target from this pattern. So we take the neckline all the way down to where the double bottom pattern is. And from the neckline, that is going to be a nice move all the way up to $30 here. Okay, so you can start targeting that only after you break this over here. So you need to break the previous local high, and then you're going to have a target all the way to the golden ratio. And again, in downtrends, even if you do come down and start retracing, usually you get rejected from the golden ratio, okay? And that creates the dead cat bounce. And so you print a high, you come back down, you retrace, you get rejected from the golden ratio, and then you continue on with the downtrend. That's how it happens. And obviously, that doesn't have to happen. Let's say you start retracing and you break through this level, you back test it as support, and you continue on. It's good. Then you are targeting your next level at the 786, which is $40.50. But until that happens, we cannot, predict that. So you're going to have multiple resistance levels above you. I would keep an eye on the daily 55 EMA. That is a very important resistance level to break. So if you break the 20 EMA on the daily, I would target that. Obviously $29.50, and you have the 0.5 fib level here, which is equally an important level at 23.74. So you have a couple of targets to the upside. Potentially, we could see something like that. But if we want to find out where our targets are going to be if we start losing this low, okay? Because if you lose this low over here, when you come back down, if you start losing this low, then you are invalidating the double bottom pattern, and we're going to have some targets to the downside. And if we end up losing this low at $13.60, I will be targeting the 1.618 of this smaller fib retracement, and that is going to be at $10.24. And this is in the realm of possibility, in my opinion, because you can potentially, drop here during the first half of July. So you can do something like this, come back up, potentially get rejected from this orange resistance trend line once again. And if you have a capitulation, you can perfectly land on the 1.618, or you can get overextended and go down and land off and bounce off the buy zone over here, or the swing low of the last pullback that we got in 2021. But I don't have to tell you that if we start losing this June/July bottom of 2021, if we start losing that, that is very negative. That is bearish, and you're going to have more targets to the downside. So until that happens, I'm not going to give you any more targets to the downside. So $10.20, you're aware of this level. This is going to be your technical target if you start losing this low. But jumping into the daily RSI, I do have quite a lot of levels over here. I do apologize. So pay attention to the blue trend lines over here. I'm going to remove this one. So as you can see, you've bounced from the blue trend lines multiple times, and this was a very strong resistance level. And over here, the smaller blue trend line, you had multiple back tests of resistance. So if you broke through them right now, and that's exactly what you did, usually you come back down and you back test them as support, and then you continue on. So this is going to be a very important thing for us to do. And I'm going to remove the white trend line from here. And if you do land on this level, okay, this would be a good entry for you to get into Avax, basically. So of course, you can end up having a little bounce, and then you drop down into the oversold. And that's not a bad thing, because you never have to buy all in, and you always have to expect that the price is going to get oversold in very bearish times. And that's exactly what I'm doing. And the red trend line over here is a good resistance level for you to look out for, because if we have a relief rally or a strong pump, we get some bullish news on Avax, this is potentially where we can run into. So I do want to move over to the Binance chart as well. So switching over to the Binance chart, on the daily stochastic RSI, I do want you to pay attention to the oversold level here below the index of 20. So I do think once you come back down here, this will be a good opportunity to dollar cost average in, just like you had a good opportunity here, which was June 16th, basically the last time I did an update on Avax. Since then, you had to move into the overbought, nice zone to take some profits. You come back down, you buy back in. Simple as that. But no financial advice here as always. Also, I would look at the MACD here for a bearish cross, which would be our downtrend confirmation. Now, as you all know, this is a lagging indicator, so you're going to start the downtrend before you get the bearish cross, but usually after you get the confirmation on the MACD, you do see continuation in the trend. So if it's a bearish cross, you're going to continue down. If it's a bullish cross, you're going to see more moves to the upside potentially. But as you can see, you had the bullish cross over here, May 21st. Since then, you were in a nice uptrend, and potentially we're just curling down for that bearish cross, and that would be your confirmation of the downtrend. And at that point, I would look at this buy zone anywhere from $14.18 all the way down to $12. And yeah, and quickly moving to the weekly chart here. We obviously have the bearish cross on the weekly, but I do want to show you the weekly RSI. Now, even if you buy over here right now and Avax drops just by a little bit, you're not, you don't have that much risk. You're not exposing yourself to so much risk. However, if you bought over here, okay, that was not very smart. and right now you're coming back down, and Avax retraced, let's say 90%, right? Buying here is very smart because you want a dollar cost average in, and you don't have that much risk because you're completely oversold. So keep that in mind. And on the stochastic, on the weekly, you're in the oversold at the moment, so still good buying opportunity from here. And if I missed out anything on the chart, please let me know down below in the comment section. Feel free to follow me on Twitter, guys. I do post technical analysis in there, and feel free to join my Patreon. I do drop in low cap gems in there. I do drop my trade alerts over there. You get technical analysis requests. I take a look at some projects and coins that you request, and we have market sentiment analysis, project reviews, all kinds of stuff on my Patreon. So the links are in the description. I'm gonna catch you in the next one. Goodbye and good night.